Mike, every time we see some sort of headline around Amazon as transportation network, it's like the immediate knee-jerk reaction is sell shares of UPS and FedEx.
Yeah.
But what's interesting about this is that the Wall Street Journal actually got its hands on emails making the pitch.
Yes.
And that seems a bit more worrisome.
It does, and I think that the market reaction, you're right. I mean, there's been this kind of reflex sensitivity to any suggestion that Amazon wants to do more. But the idea that you're going to target fuel surcharges and these very specific pricing tactics that these shippers make, going direct to customers, maybe it seems like it's just going to create that much more pricing pressure. I think there also been a sense out there that this kind of get it to me now economy that we have right now, the burden for that is really being borne on some level by UPS and FedEx, right? In other words, they are that point in the whole system that it's where a lot of the cost is building up.
What's your view on this, Surat, as to whether this at some point leads to a kickback on Amazon and whether this is important for their investment case overall?
I do think it's important. One of the things going on with Amazon is the pressure on margins. As they get bigger, people are going to be focused more on their earnings growth. And now here's a key component of one of their biggest costs, which is really deliverables. And if they can go after this, this is going to put a lot of pressure on their suppliers. I mean, it's an analogous to what Apple does to its suppliers in order to keep up its margins. Amazon's going to go after UPS and FedEx and say, if we can do it lower, then we're not going to use you. And that's just going to start a margin pressure for UPS and FedEx that's going to be pretty tough for them.
Let's talk macro. China Vice President Wang Qishan addressing the World Economic Forum in Davos today, expressing optimism about the Chinese economy.
China's development, there are all sorts of views. Someone is saying that China is approaching the end of its growth, or we have already reached the end of the growth. But if you ask us, we believe that we have not approached the end. We are actually pursuing more sustainable growth.
Mike, to what extent do you I mean, if we can put trade aside, to what extent do you think a China slowdown would spook the market? Is it already sort of expected to continue to slow year on year by 1% or so?
I think if it's just this gradual slowdown, I don't think it will come as a surprise. I do think that China, any kind of a hard landing, any sign that their stimulus efforts are falling flat, that to me is one of the bigger risks for the market. In other words, I think that's why the market is afraid of the trade issue, right? It's not so much about our export sector or anything like that. It's because does this drive China, the greatest source of net growth in the world, into some kind of a real tailspin? So not surprised to hear the comments there that they don't believe their growth is at the end. But no, I do think it's a risk, but it's one that we've been living with for, a long time at this point. So I think it would have to accelerate to the downside to really come as news.
And Surat, I'm going to bring this full circle right now and say I would argue that for FedEx and UPS, potentially at least near term, the bigger risk to those businesses is slowing global growth in places like China. Do you think it's actually happening, or do you think companies like Apple are running for cover and using that sort of more macro scenario as an excuse right now?
I think companies are. I mean, you saw it with Stanley Black & Decker yesterday. Companies are using this, or they're seeing this, A, with the tariffs, and A, with trade slowing down a little bit, that you're going to see kind of the operating leverage, at least for the next couple of quarters, disappear. And I think that's going to be hard to do to go forward.
The one point I'd just add on the Chinese economy, particularly if you look at the trade data most recently, is I think the effect of the US-China trade war has been similar to what it's been on the US, which is it's affect market sentiment more than it's affected the economy so far. If you looked at their trade data, it was much more softness going to Europe and to Japan than necessarily the US. And then I think therefore is a risk to the downside. If things elevate with the trade war, there's a bigger effect. And actually what we've seen in the slowing of the Chinese economy is probably just its typical global own doing, not the trade war. So it's something to watch if it escalates rather than that it's going to get so much better if it improves.
There's an unbalanced economy even outside the trade sector, right? I mean, that is what they're contending.
Let's talk about the U.S. economy next.
Yes, J.P. Morgan Chief Jamie Dimon on Squawk Box earlier today. Here's what he had to say.
The U.S. economy is kind of like a ship that's going, it's growing X the shutdown 2 to 2.5%, and that's going to keep on going for a while. Then you have all this other noise, okay? Geopolitical noise, Brexit noise, what's the Fed going to do? I'll talk about that in a second. Shutdown, trade, and those they're kind of like boiling the waters in front of that ship. So eventually that may very well cause a slowdown or a recession. And I don't know if it's 2020 or 2021, but the range of possibilities is broader and the range of bad outcomes is increasing.
Mike, what do you think? I mean, we keep hearing about this possibility, rising risk of recession. 2020 or 2021 doesn't sound quite
no,
so scary.
It's not that alarming, really. I mean, it really is at some point, you're just sort of stating the probabilities as they are in the world, right? I mean, after you've gone this long without a recession. So I don't think there's anything to quibble with about that, unless 2.5% growth is not the steady state pace, right? If in fact the Fed is right and sub 2% is kind of where the economy wants to expand, all else being equal, then we might have to adjust a little more. And it just feels as if you're closer to stall speed when you have these outside influences that are restraining stuff.
So when you hear that kind of sentiment from Jamie Dimon, do you think, okay, the banks, the ones that he oversees, they're a buy in this environment?
What I think, well, we're buying the banks. So I do think what he's trying to say is, if some of these things become much bigger than they are, that's going to cause a real problem. But by themselves today, they're going to let us be in the steady state. And given where we are, unless something really gets bad, like the trade war gets really bad, or this government shutdown goes on for months, I think we can absorb these things. But if they become too big, then I think you're going to get very defensive pretty quickly.